So today we will be discussing the inheritance tax. We'll look at what is inheritance tax, what is its concept, why is it there actually, and in which countries is it there. Is it there in India or not, and also what is the controversy with respect to inheritance tax that is going on presently in India, everything in detail. So let's get started. So first things first, what is inheritance tax? So inheritance tax, of course the word inheritance is a big giveaway. What is inheritance? Whenever someone gets some property from their mother, father, ancestors, right, after they are dead. So once they die, after their demise, their property is inherited by their, let's say, future generations, by their children, grandchildren, so on and so forth. So you are said to have inherited their property. So when you inherit that property, for that inheritance, there would be a tax that would be applied, which will be nothing but the inheritance tax. So it is what? It is a tax levied on the assets inherited. Okay, so someone has passed away, so their assets are there. Now someone would inherit those assets. Let's say a mother passes away and her child inherits that particular asset. So since they are inheriting this asset, this individual that is inheriting that asset will be paying the tax. Asset of what? Asset of the individual person who is actually deceased. So two people are there in this, the one who is deceased and the one who inherits. So the property is of the one who is deceased and the tax is paid by the one who inherits the property. Now, how is the tax rate decided? The tax rate depends upon the value of the inherited property. Of course, it depends on the value. How much is the value? If the value is very less, it won't even come under the slab of inheritance tax. But if the value is high, the inheritance tax may increase, and also the relationship with the deceased. For example, if it is a direct descendant, as in if it's a daughter or a son, then the inheritance tax would be low because it's the direct relation. If they are indirectly related, right, or let's say not related at all, but still the property was given to that person, so that person is inheriting, but they were of far relations or no relation at all, then the inheritance tax may be higher also. Okay, a very important fact to note that India currently does not impose inheritance tax. India is not having inheritance tax as we speak. Okay, now countries like USA, UK and France has inheritance tax. So that answers the question, which countries have? US, UK, France. India does not have it. Now what are the concepts similar to inheritance tax? As I said, India does not have it, but did India have anything similar to this, or does India have anything similar to this? Right now nothing similar to this also is there in India, but previously India had certain things which were similar to this. Let us look at that. One is the estate duty, which was imposed from 1953, right, but was abolished in 1985. So estate duty was there, but in 1985 it has been abolished. It went up to 85%, a very high amount. Gift tax and wealth tax were also there. They were introduced but abolished in 1998 and 2015 respectively. Gift tax abolished in 1998, wealth tax abolished in 2015. Gift tax was briefly, again after being abolished in 1998, was briefly introduced in 2004 but again taken back. So these are the concepts related to inheritance tax which are again no longer present in India. Let us understand these concepts now in detail. So first is the estate duty. Now this estate duty is, out of the three, the closest to the inheritance tax. It is similar to the inheritance tax. Okay. So what is this estate duty? Now understand that it is almost the same. It is taxing the entirety of an individual's property as in asset. So in inheritance tax we are talking about taxing the asset. Here also we are talking about taxing the asset at the time of the passing. That means at the time of the death of that particular person. Okay, and this tax would be required to be paid. It would become an obligation when, upon the transfer to the heirs, upon the transfer to the person to whom it is being transferred. Now, what is the difference? It means exactly the same. When someone is passing away, there is a tax on the asset when it is being transferred to their heirs. But what's the difference? The difference is, in inheritance tax, what happens is you get the property plus tax. Who is doing that? This property is being received by the person who is inheriting it, one who inherits, plus the tax is also paid by the one who inherits it. The person who is inheriting the property is paying the tax, that is your inheritance tax. But in estate duty, that does not happen. In estate duty, when the estate is getting transferred to the heir, before it gets transferred, you have to pay the tax. So the tax is being paid before it is getting transferred. So a representative of the person or the lawyer or whoever is the representative, or in fact the government would be taxing it before it gets transferred. The onus will not be on the one who is inheriting. Before it gets inherited, it would be taxed already. So that is the only difference. Other things remain constant. Okay, it is applicable on movable assets. Okay, real estate and movable assets within or outside India. So even if it is outside India, owned by an Indian, and it is getting transferred, even then estate duty would be charged. Now, gift tax. What is a gift tax? Here, in inheritance tax or estate duty, what is happening? The person is dying and the property is transferred as per their will to someone who is inheriting them. A gift tax is a tax when I would want to transfer something as a gift to my, let's say, to my mother, to my brother, to my sister, to my wife, to anyone, then, and not, I'm not selling it, I'm just transferring it, I want to give it to them, so I'm just giving it to them. So then what will happen? I'm still alive. So a gift tax would be charged because I'm giving them as a gift. A gift tax would be charged. Here the only difference is person giving is alive. Okay, it's gift tax is the tax on money or property that one living person or corporate entity gives to another. So the person here is living. It is basically a type of a transfer tax that is imposed when someone gives something of value to someone else. So it's like I am transferring also, that can happen. How can we avoid this? See, this will be charged. The other way to avoid this is I am selling it. Then that person needs to have money, but then the whole point of gift is gone. So gift tax is also there. Illegal ways of avoiding is of course not recommended because there are high punishments for these kind of things. Now concepts, other concept is like wealth tax. Wealth tax is another similar concept. But here what is happening? Here you are not transferring anything. Here the thing is, let's say I have too much of wealth. So every year the government will charge me certain tax on that wealth, even if I am not transferring it to anyone. That is your wealth tax. So which is an annual tax charged on wealth when the owner is of course alive and no transfer is taking place. I own it, I have it, I am alive, I am paying a wealth tax every year. Okay. So these are the related concept. Now what is the inheritance tax controversy that is going on? So recently what happened is, okay, one of the opposition party's leader, suggested that there should be a discussion and an implementation of the inheritance tax. So this gentleman actually suggested to discuss, debate and implement the inheritance tax. Now this suggestion saw a huge backlash from critics, from the the other parties, so on and so forth. So much of backlash that the party from which this gentleman comes from, they themselves have given out a statement that whatever this position on inheritance tax is there of this leader, they distance themselves from it and has said that this is merely the personal view of that particular person and not of the entire party. Okay, so this is the controversy that is presently going on. Okay, now let us understand. So controversy will keep on happening, but for our exam perspective, we need to understand what are the benefits or advantages and at the same time what are the disadvantages for it. Okay, so what is the rationale behind this suggestion, or what can be the advantages? The first rationale would be, actually this was the first rationale given by the leader. There are other rationales also. It does not mean just because some other country is doing, you also do it. But one of the rationale was this, that USA has inheritance tax up to 55%. Right, inheritance tax is there. So 55% is tax and the remaining 45% is distributed among the legal heir. So sort of an estate duty kind of an inheritance tax is there in USA. So this is one rationale. Other important thing is that it can be a potential revenue source for the government, right? It can reduce the wealth inequality also, because the revenue would be collected by the government. Government can utilize this money for socio-economic development. So it would not automatically reduce wealth inequality. This money needs to be then properly utilized for socio-economic development in order to reduce the inequality, plus promoting equality of opportunity. Okay, so these are the benefits. But what are the arguments against the wealth tax? The argument is, if the wealth tax is so high, estate duty, as we saw, reached 85%, people would try to avoid it. So tax evasion would be there. It would discourage hard work. Why would it discourage hard work? If a person wants to amass wealth, they know whatever wealth I amass, it will go to my children, my grandchildren, so on and so forth. But if 55, 60, 85% is being taken away, the motive to do hard work to amass more wealth then may go down, hence discouraging hard work. Also, potential double taxation of already taxed assets. I'll tell you how. Remember, there whenever whatever we earn, we pay income tax on that, we pay indirect taxes, all those taxes are there. But here we are not talking about indirect taxes, let's talk about direct ones. So whenever we are buying an asset, we are already paying income tax on the income which we are using to buy the asset. Now what can happen if let's say there is a wealth tax also. So wealth tax is an annual tax. So the person is paying the wealth tax also on that property, and when the person dies, then the person pays inheritance tax also. So what will be, in fact it can be triple taxation. So it can be income tax, of course, then wealth tax yearly, then inheritance tax. So anyhow in India wealth tax is not there, so even if this is not there, there would be income tax and then further inheritance tax, leading to potential double taxation of the already taxed assets. Okay, and not just income tax, but even when you buy property, again there is a property tax. So even if you don't take income tax into account, because that though anyhow we are paying, again property tax plus inheritance tax, hence potential double taxation of already taxed assets will be there. So that would be one of the negative. So this is what inheritance tax is all about and the related concept. So that's about it. I hope this is absolutely clear. It's important, the questions on this and especially the differences between different types of concepts which are similar to inheritance tax but they are not inheritance tax should also be very clear.